Hello everyone and welcome to the Monday Open hosted by the Vantage private client team. My name is Ollie and joining me today we've got Steve. How you doing, Steve?
I'm good, Ollie. Preparing for the F1 in Melbourne. Should be fun.
Very excited about it. We get to see the Raiders and Manly kick back off as well.
Yeah, as well as that.
It's an exciting one.
Bit of a rivalry. Hopefully the Raiders will smash the Eagles.
I wish I could be there for it. All right, so moving into the agenda for the video ahead. So for all of our returning viewers, this will all look very familiar. And for any of our new faces here, this is how we normally run it. So starting out, we'll take a look at the major events from last week, take a look at our key themes and see how these drove prices. We'll then move into the week ahead section where we'll put a spotlight on a couple of the major events coming up for the week ahead, see how this fits in with our key themes and give our take on where we think prices will go. Then move into the technical corner where we'll be analysing a couple key different markets with our technical indicators. And lastly, we'll move into our Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. As well, just want to reiterate to everybody that any advice we discuss in this is general in nature. Any projections we give are not guaranteed, and previous price action will not always be a reliable indicator for future performance. So shifting into the top traded products for last week, I did find it very interesting that we got 3 pound pairings in there, especially given we didn't have a huge amount of data coming out of the UK. But how about you, Steve? What's your surprises in there?
Yeah, this is the first for me when it comes to seeing as many pound pairs in. But yeah, let's deep dive into last week. Quite a few sort of events that did happen. We'll try to capture as much because there's a lot to talk about, not only last week but this week and what's going on with the market. Obviously, we had public holidays, to start the week. We did have the Australian CPI data, so inflation, so consumer price index, which was higher than expected. Basically, it was 3.8%, unchanged from December 2025. And the trim mean, which is basically what the RBA looks at, was 3.4%, which is above their 2 to 3% band. That the causes is really housing, so up by 66.8%, food and non-alcoholic beverages up by 3.1%, as well as recreational and culture up by 3.7%. We've also seen electricity prices surge by as much as 32.2% annually, largely due to the expiration of government energy rebates. So not looking the best locally. Obviously, this really does put the spotlight now back onto the RBA. So we do have the March meeting that's going to be coming up, but seeing the sort of RBA, they're more of a sit and hold. So the likeliness of a May interest rate hike is probably, with 25 basis points, is probably pretty high. Now, obviously, there's no April meeting. With the ASIC tracker, as soon as the inflation data came out, it basically went from a 9% of a rate hike in March to about 13%. So probably looking at least maybe one in May, but we'll have to wait and see how the data actually comes out. So a bit of surprise there. We saw Tokyo. Obviously, the Tokyo CPI getting a bit better, which is good from their perspective. A lot of the US data, so we saw positive sort of employment data, but really the PPI, so the inflation was a bit higher than expected, which obviously it had a bit of volatility, especially with gold, for example. But a lot of the sort of it wasn't as as big of a volatility as I would have expected. But there are quite a few keynote events. So first, we towards the beginning of the week we saw the Nvidia earnings. So really around the sort of AI spend, the price action it actually went to $200 after the earnings, and then basically shot down. So Nvidia, just to kind of reinforce that sort of sentiment around the AI race. We also saw the Trump updates when it comes to tariffs. So previously he went from 10% to 15%, and now back to 10% on Tuesday. But the biggest thing that's basically shocked the market over the weekend was around the US-Iran update. So obviously there were talks, there was a deadline when it comes to this data, but basically the US as well as Israel has actually struck on Iran as well as killing one of their sort of supreme leaders. So bit of surprise we saw obviously going on to this week and how that's impacted. We saw the likes of the price action with gold gapping quite significantly. I think it was about five five.
Yeah, it was
Eight.
touching on
Yeah,
5,400 within 5 minutes of the open.
yeah,
Like it's quickly
yeah,
sold off, but
yeah.
it's I mean, to push that far was crazy.
Yeah, it was a insane movement. Obviously, oil also gapped up. So we're seeing a lot of volatility. We're seeing impacts within the indices. Obviously, you would talk about in the Q&A, but this week is really about trying to figure out exactly what's going to happen when it comes to that. So there's a lot of activity. It's probably one of the busiest Mondays that we've seen quite some time, considering that it has had also impact. So Iran's actually struck back, and they've actually focused on US bases in areas such as the UAE, etc., and around surrounding areas. So it is actually ongoing. A lot of talks about it. I guess the concern is that Iran does provide 2% of the world's oil. They're also part of the OPEC. From oil producers, the OPEC, there's not much capacity for a lot of the OPEC members except for Saudi Arabia. So yeah, there's concerns around, I guess, the supply and demand. So limiting the sort of supply. Plus, Iran does control the actual. I forget the name of the Gulf. Ollie, do you remember the name of the Gulf?
Oh, don't put me on
The
the spot like
yeah,
that. No, but I do find it quite interesting though that I guess there's concerns over the supply for oil in Iran. Like around the same weekend where we did see OPEC actually resume their rate supply, so their rate hike of supply. So in a way, it kind of looks like it wants to nudge out, like a bit balanced out, but it's definitely not. The price reaction's been nuts.
yeah. Well, I guess yeah. And the concerns is basically because Iran controls a lot of the shipping of where oil comes through. Basically, that accounts for 20% of oil. So, fingers crossed. I guess for especially for us when it comes to oil prices, but there's a lot of uncertainty. But I guess the other counter argument is that with oil prices going up, for example, then it could lead to inflation. So it's very hard to kind of gauge at this stage how that's going to impact. Even when the actual strikes occurred, the price action on crypto, for example, basically Bitcoin went to 63,000 and then went up straight to 67,000 over the weekend, and other cryptos kind of followed. So it's interesting to see whether this is going to be ongoing, or whether it's going to be like Venezuela, where there was a minor impact, and then now it's almost a forgotten thing. So it really depends on what the actions are. But on a positive note, there has been talks that Trump as well as Iran are prepared to talk. So it could be one of those sort of events where it will die over. But definitely keep in mind, ensure with the risk management. But other than obviously the pressing news, we've got the Australian GDP quarter on quarter. So that will be a good indication to also play into the narrative of the RBA, and as well as the upcoming decisions. We've got the China, so there's a lot of data coming out of China when it comes to the PMI, so purchasing manager index, so the manufacturing and non-manufacturing. We've also got the rating dog PMIs. So the rating dog PMIs are basically the sort of smaller companies, while the normal PMIs are more the bigger companies. We've got the UK budget release. I don't think there's going to be too much to come out of that. We've got the Eurozone CPI, Swiss CPI, but a lot of the US heavy data, again, it's going to also reinforce what happened last week, to show that sort of resilience when it comes to employment. But there's a lot to cover, but we'll have to see with how this week pans out. What are any other sort of thoughts, Ollie, on how this week's going to play out? Like what do you think is going to happen?
I'm kind of expecting a lot of volatility in here because I do think, given where we're sitting with the US Iran Israel situation at the moment, I don't think any headlines will be quite reactionary for the markets. I haven't had too much of a look at the volatility index, but I imagine that's probably had a bit of a spike for the morning so far. And I don't think any headlines will sway the market. So if you are trading in safe haven assets or risk off assets, it's definitely a week to make sure you have an effective risk management strategy in place. But personally, I'm probably looking towards the safe haven assets. I think they'll catch a strong start to the week, and then we'll just wait to see what the headlines look like. But that seems like a pretty good segue to go into our technical corner now. So let me share my screen with everybody. So starting out, I'm taking a look at the Australian dollar against the US dollar. Interestingly enough, we've got a risk currency against a safe haven currency. So let's see what we are looking at for the week so far. So starting off, we are in I'd say a pretty strong uptrend at the moment, a bit of a plateau towards the middle of last year where we did largely range bound between the 64 to 66 cents. Once we did break above that, the upper part of that range and break 67, it's been pretty much blue skies since. So right now we have started off the week green, but I think we're coming in on our 8th consecutive green week for the AUD against the USD on the weekly. We're seeing some divergence on the MACD, which is above its signal, which is adding to the bullish pressure. Although I am very conscious that we're seeing the RSI above 70 in the historically overbought area. So I'm looking to see if the prices will look to retest these swing highs around the 71.5 cents, or if we're looking for a bit of a pullback towards its moving averages, which would suggest what the RSI and the overextension past the moving averages would look at. So moving this now into the daily chart to get an idea of where we are sitting. So let me just focus this in the center of the screen. So as we can see on our moving averages, they are all fanned out, evenly spaced, all pointed in the same direction, which is telling me there is some pretty strong momentum, bullish momentum on the daily chart. However, to play devil's advocate on that, we're seeing the MACD lines below its signal. They are somewhat parallel on there, so not a lot of divergence. I think if we're adding to the bearish pressure, we want to see some divergence on there. If we're looking for buying opportunities, probably want to see some convergence, and the RSI is similar to that one as well. Over the pretty much over 2026, we've seen the 20-day moving average act as a support level for AUD USD prices. That's carried into 2026, most recently as of this morning, where we did see the prices gap lower and has quickly moved to fill that gap once finding support at the 20-day moving average. So if I am a buyer in this market, I've got a couple of things I want to be conscious of, namely being that once we do break this recent swing high, we are trading into a multi-year high. So the targets do get a little bit more difficult. But if I am a buyer in this market, first of all, I want to see a break above last week's highs. That'll be above 71.5 cents. And then ideally, you want to see the prices come back to find support at a previous resistance level. But I'm thinking a break and a hold above this key level where you could be looking to then make a higher high, carrying on this trend of higher highs as well. Risk management for this, I'd probably be looking at this key resistance level. I think if we see a break and a hold above, I probably want to manage my risk around here as well. But on the other side of that, if I am a seller, I think considering we have seen prices find resistance and struggle to close above this level on 4 occasions now over the previous 2 weeks, if we are a seller, I think we'd want to see ideally this resistance hold and then for prices to move lower into its key moving average levels. For prices now, I think if we do break below the 50-day moving average, we could see it then move back towards a psychologically significant 70 cents and move lower on that as well. But that is very much a long-term play and it could be very much driven by risk on risk off flows for the week. The next market I want to take a look at is copper. So we're not going to be looking on the two main metals in focus on gold and silver. I think those have been touched on a lot. And I do think copper is at a quite an interesting level here. So starting out on the weekly chart for copper, we are in a pretty strong upward trend. Most recently, we're seeing some heavy divergence on our moving averages, which are all fanned out, evenly spaced, pointed in the right direction, which is adding to the bullish pressure. If we're looking on our MACD, we're starting to see the MACD converge with its signal line, which could tell me that we are looking for a period of ranging or potential crossover on momentum. So I'm going to monitor this one quite closely. And that's shared by our RSI as well, which is looking like it does want to cross over its respective signal. For the most recent price action, though, I'm seeing prices are quite overextended from their moving averages. As well, I'm seeing some sizable top wicks on a lot of the previous weekly candles. I believe we've got 6 out of the last 8 weekly candles have tested above and failed to close above $6 for copper. So I do think that's a quite interesting level. And I do think if we are bullish in this market, we need to see a break and a hold above that psychologically significant level. Moving into the daily chart now to get an idea for what we could see. So on the day so far, we did see it actually did briefly trade above $6 and quickly pulled back. So if I am a buyer in this market, first of all, I want to see prices break and hold above the psychologically significant $6 mark and then challenge to make a high on last week, namely being around these sorts of levels just here. If we can see a break and a hold above this level, then I do think the next key price target would be up at a swing high around the 6.25 level. And I want to be managing my risk around this psychologically significant price as well. Similarly, though, if I am a seller in the market, I want to see prices find resistance on here and then trade into its moving averages, where I'd be looking for an entry to move further into its moving averages. So that brings me to the end of the technicals on here now. So now moving into the Q&As, where Steve and I will answer some of your guys' most commonly asked questions.
Yeah, so question 1, how could the Clarity Act impact crypto? So basically the Clarity Act is US server legislation. Right now, Trump's given the deadline of 1st of March in order for that to be resolved. From all news reports, I don't think there has been a resolution just yet. But basically the Clarity Act is really looking at defining the actual digital assets to see where it actually falls under. So whether it's under the Securities and Exchange Commission or otherwise Commodity Futures Trading Commission. So basically whether it's classified as a security or more like a commodity. So having these sort of regulations or enforcement with clear rules, it helps provide those sort of guardrails just so it makes it easier that companies know, where they sit when it comes to crypto. It as having clear rules will actually also attract more institutional investors and startup and potentially more funding. So right now, insta players have basically got trillions of dollars on the sideline, and they're really waiting for this sort of clarity, pun intended, for this Clarity Act to go ahead, because as long as there's rules and guardrails, it means that there's no ambiguity over their sort of investment. And yeah, with this sort of news, if it was to pass, you'll probably see quite a lot of volatility within crypto markets, and it could be positive for the industry. Most likely it will, but then again, it's hard to tell. So it depends on also the rulings and if there's any sort of stricter rules. And really, the block at the moment is between the banks as well as crypto providers, more around the actual interest and yield that can be applied. So the banks might want to try to prevent crypto companies from coming in because it's taking it across their business and impacting their earnings, for example.
Thank you. And I'll take it away for question 2. Which markets were previously impacted by the US-Iran conflict? So for this question, I'll be referring to the 12-day war in June 2025, which ended with the US taking out Iranian nuclear sites and prompting a ceasefire the day following. So following this one, we did see some strong market moves in a number of key areas impacted heavily by risk on or risk off flows. So for the week following the ceasefire call, we saw oil prices dropped 12.3%, gold was down 2.8%, the DXY was down 1.5%, Bitcoin was up 7.9%, the Nasdaq was up 4.4%, and Aussie USD prices actually were up 1.3% as well. So obviously you can see there's some sizable moves in there, and obviously there are different circumstances this time around. I do also just want to reiterate that previous price action will not always be a reliable indicator for future price movement, but hopefully an insight into that can give you some sort of indication for which markets traders could be looking at for the week ahead. All right, so that brings us to the end of the video today. So a recording of this video will be uploaded on YouTube once we have concluded. As well, we will be posting a link to this in our VIP chat room as well as on Telegram. So as well, for anybody who is looking to get involved with the Monday Open and send through any questions, please feel free to do so in the VIP chat room or reach out to your relationship manager directly. So that's all from me today. Thank you everybody for watching, and Steve, I will see you later.
Thank you, Ollie. Enjoy evening, everyone.